Welcome back to TechKidFX for another quant price prediction update, which at the time of this recording is holding below the 20-day MA here on the 4-hour chart, which is now acting as resistance for us to continue gearing up. We are also holding above a key area of support at around the $110.9 mark, which is now acting as support for us to continue gearing up. I also have a couple of chart patterns that are information that could possibly give us breakouts to the upper side. And the first chart pattern that I have information is an ascending channel, and I can connect these lower highs like that to form the upper side of the channel, then connect these lows to form the lower side of the channel. And you can see that we are trading within this ascending channel, and at the time of this recording we have managed to hit the lower side of the channel, and we seem to be having a bit of a bounce to the upside. And in case we continue gearing up, see a break above the 20-day MA, act as support and continue gearing up to the upper side of the channel, there are high chances that we could possibly see a breakout out of this chart pattern to the upper side, get a successive retest in a move that could help us get to the next key area of resistance at around the $124.9 mark. We also need to have in mind that in case further breakdown continues, there are also high chances of seeing the breakout out of the channel to the lower side, maybe lose our key area of support at around the $110.9 mark. And in case such a move plays out, then further breakdown here on the charts will be expected to the area at around the $105 and the $106 mark, where we have our next key area of support. We also have a double bottom that is information right here that could also possibly give us a breakout to the upper side. And you can see that at around the $106 mark we have our bottoms. And if I draw out the chart pattern, we can have these as the first bottom, then we saw the formation of the neckline, then the second bottom, and there are high chances that in case we continue gearing up, we are possibly going to see the breakout to the upper side and continue gearing up. And this is a chart pattern that breaks to the upper side, having the minimum target area of the breakout being given by the height between the neckline and the bottoms. And we can get that height and then place it above the neckline to give us a minimum target area back to the area at around the $158 mark. So that is what we can expect in case the breakout happens to the upper side. And that is my key expectations, basing it on the chart patterns that we have information here on this chart, and now giving you my analysis basing it on the Elliot wave structures. You can see that after seeing our bear market low at around the $40.1 mark down there, we started this massive bounce to the upside, obeying the Elliot wave structures, where I have these 5 wave structure having the wave 5 giving us a peak at around the $229.6 mark, and also completing the formation of that first wave. Then we started a corrective structure in the formation of this wave 2 in a move that bottomed out within this red target area. And having seen the formation of that 1-2 setup, whatever we expected next was the start of an impulsive wave to the upside in the formation of this wave 3, and giving you my minimum target areas in the formation of that wave 3, using the trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $399.4 mark. And that is the minimum that we can expect Quant to do in the bull market in the formation of that wave 3. I also have a bearish scenario here on the Quant chart in case we lose significant areas of support, like the area at around the $100.3 mark. In case we lose that key area of support, I also have a chart pattern that is information that could give us a breakdown to the lower side, which is a head and shoulders pattern. Having that as the left shoulder, then we have the formation of the head, then we have seen the formation of the neckline, and this is the right shoulder over here. And this is a chart pattern that could possibly give us a breakdown to the lower side, having the minimum target area of the breakout being given by the height between the head and the neckline, and we can get that height and then place it below the neckline to give us a minimum target area back to the area at around the $42.2 mark, and that is the minimum that we can expect Quant to do on the worst case scenario in case we continue seeing further breakdown and also lose significant areas of support. And also taking a look at the indicators here on the RSI, we are trading at around the 46 mark, meaning we have massive room for us to fully support higher prices, but in case the breakdown continues, that will still be supported. Also taking a look at the MACD, we have been able to print a bearish cross, though we are seeing a bit of a decrease in the selling momentum. So let's be patient and see how that plays out, and I'll be keeping you updated.